This is your Bay Area mortgage planner, John Payne, with the RateWatch Now Daily Update Report. Happy Wednesday, everyone. Here's a snapshot of yesterday's mortgage-backed securities market. Pretty much closed above where we started off today. Overall, not a bad day. What's going to make rates go up today? We have supply concerns. We have the 7-year auction that's going on today for about $27 billion. Now, I'm not really that much concerned about the 7-year auction because the austerity protest is going on over in Europe. Euro is raising its head again. Bottom line is Europeans don't want to be told what to do. And we saw what happened with the protest when it happened in Greece. So this will probably cause a flight to quality over here. So I'm expecting money to leave here, come over and buy U.S. bonds for a safe haven. On top of that, the S&P is now concerned about Spain. Now, when the S&P was concerned about Ireland, they were right on. So makes me think that they're going to be spot on with Spain too. This will cause a flight to quality, over in U.S. bonds. Also, the 5-year auction yesterday went great. So we had the 2-year auction and a 5-year auction this week. Both of them went great. So I think that the 7-year auction is going to go quite well also. Here's what the market is doing so far this morning. On its way down, maybe a little bit overpricing from yesterday. Also, maybe just a little profit taking. We look at the lenders and how they are responding to the economic news. And you can see that, I call it about a split. Here's what the trading charts look like thus far. We are coming down to touch this trend line, which I think is what we probably need to do. Now, based upon the auction results on the 7-year auction, if we have a good auction, we'll probably bounce back off this and go back up. If we have a bad auction, I think that we're going to fall down below the trend line. Right now, we just have sideways trading. We go down and touch it. The bottom, we go back up and touch the top, we come back down and touch the bottom, go up to touch the top. Now this says that we should go back down. Now I'm not sure how far we'll go down. Again, it's going to depend upon the 7-year auction. Also, we have GDP coming out tomorrow, and GDP is one of the top 3 indicators in this economy. We have GDP, we have unemployment, and we have inflation. Right now, during this recession, those are the 3 key elements that I keep my eye on to determine which way mortgage rates are going to go. Long-term view, again, we do have to come down and touch this trend line, so I won't be surprised if we do that. And again, based on the 7-year auction, will determine how far we drop or whether or not we go back in a increased direction. Now, remember, anything that goes up is good for us because that means that the pricing is getting better, which means that rates are coming down. Rates and our pricing for mortgage rates are having an inverse relationship. So as you see prices go up in an inverse relationship, rates will go down. And when I say pricing on rates, I'm talking about the credits that we give to borrowers. That will go up. Okay, so that's the first thing that goes up. The pricing goes up, the back-end pricing goes up, which means there's more credit that we can pass on to the borrowers. And then after that, it hits a certain point where lenders will say, okay, that's enough pricing. Then they'll start dropping rates. Just needed to explain that. In summary, the euro problem is back. It seems like once it goes away, it comes back again. I wonder how long this euro currency is going to stay around. The auctions have gone quite well this week. Today we have 27 billion of 7-year notes being auctioned off, and I think that's going to go fine due to the flight to quality. And we are rising and falling perfectly within the trading range, so we can't argue about that. GDP, as I mentioned, is one of the big 3 pieces of news to focus on, and it can shift the direction of the markets. And I think based on what that number is going to be tomorrow, if we have a good GDP number, we could see rates fall. Or if we have a bad GDP number, we could see rates fall. Good GDP number, we'll see rates go up. And recently, jobless claims have had a turbocharge on big news released the same day. And let me explain what I mean here. We could have a bad GDP number and a good jobless claim number, and it will offset the GDP number. Now, jobless claims seems to be the trump in all of this. So be mindful of that. That's all I have for you today, Bay Area. Make it a great day. If you know of anyone that could benefit from my morning update report, please pay it forward. Until tomorrow, Bay Area.